Good morning, everyone. Welcome to the On Time, On Target Morning Brief for Invested Fighter Pilot Precision on a daily basis. Today, we're going to talk about a speculative holding called Affirm Holdings, ticker symbols AFRM. This was brought to me by a client not too long ago, a couple of weeks ago. I've not been in this name forever and actually wasn't familiar with it until a couple of weeks ago. But a client brought it to me and said, hey, this is something you need to check out. I want in on. I did my due diligence. We got blessed it, gave it a thumbs up, put a bunch into his account. And then lo and behold, yesterday, it jumps 20% on a new relationship with Target, where what Affirm Holdings does this is a layman's explanation of what they do, but they're a payment processor. So when you think of payment processors, there's a million of them, but they allow smaller short-term purchases to be kicked out over time, where you pay them off over time. So you think of when you go to buy a mattress, which we bought one, I don't know, several months ago, they talk you into this expensive mattress because you can pay on zero interest for, I don't know, 7-year, loan on a mattress. I don't know. We took it and did it and then just paid it off because we got tired of making the payments. But, they're allowing this for stuff like Christmas shopping. Now, you could argue ethically and from a financial planner standpoint and a good, money management perspective, should you be buying a bunch of stuff that you now need to pay off over several months instead of just buying stuff that you can pay for today? I'm not going to take you up on an argument because that's not what this is about. This is about that there are a lot of people that will do that, and they're looking for the opportunity to be able to kick those payments out. You and I may chuckle and say, hose themselves over, right? But anyhow, are they able to make money through these partnerships? And I think the answer is yes. How do they make their money? Again, this is me just barely looking into it for a couple hours, but it appears that they make their money from Target, the store. They also have a relationship with Apple. So, these are big names that are out there where the stores now get more volume and shopping because consumers can spend more because they aren't as constrained by their financial situation as they are maybe in reality, right? So they can spend future dollars instead of the current dollars that they have right now. So very much an American way to do things. So that's why it's so popular right now. And again, Target going into the Christmas season is why the stock jumped yesterday. It's selling off a little bit today, which it tends to do, right, when things jump 20% in a day. But we're certainly going to take a look at it. And I think it's just as attractive as Square or, PayPal or any of the other or MasterCard or Visa, if you think kind of old school processors, just as attractive as any of those names are. I think this industry is going to be around pretty much forever. I don't know if Affirm holds, lets you hold crypto and transact in crypto like, Square, I think, and PayPal. I know Square does. I think PayPal does now too. But that would be coming, right? So again, all of these payment processors tend to make money over time because of the consumer out there. So that's what we're going to talk about today. I'll pull the chart for you. I'll show you where you are, and then you can make your own decision if you want to enter here after it's jumped 20%. But it's certainly something that I'm going to talk about even tonight during the investment advisory board under new ideas. This is one of the top ones I have, and we'll take a look at it. All right. Our question of the day is we've got a lot of questions going into the fourth quarter about required minimum distributions. What are the rules? When do you take them? I will talk to that specifically. I generally don't start talking RMDs with folks until Thanksgiving. That's more of a workflow management on my side. There's certain seasons for things, and when folks approach me now, I'm like, if you need the money now, let's do it. Otherwise, let's wait till Thanksgiving. We're going to kind of go into R&D mode for a week and make sure everybody's taken care of, because that's all we look at for a week there. But we'll recover the rules. We'll cover the rules today, so they'll be fresh on your mind. All right. And again, I did mention the investment advisory board, can't speak this morning, is tonight. Again, at 6 p.m. Central. Should last for about a 30 to 35 minute presentation, and then I'll open it up to questions after that. It's the first one, so there may not be any questions, so I get that. But if you sign up and go and attend, you can either watch passively or you can hop in the chat or Q&A window and ask questions. I would love that. Ask the hard questions, make me answer, right? That's why I want to do that. So I want to know what's on everybody's mind. Again, it's the first one, so maybe a bit dry, maybe a bit, I'll try not to make it amateurish, but try to, get as much good information flow out there. All of the major firms do this, so I want to start doing it. So we're ready to grow commensurate with, mature into it now before the assets flow in. All right. As far as our day trading stuff today, if you look at the futures, everything is long. There are no shorts today. If you hop into this buzz saw, that's on you. But everything's up basically 1% this morning. We've kicked the can with the debt as far as the U.S. government, which is what we do. I don't know, 100% of the time. But we eventually, fought a fight for probably, I don't know, that's an opinion. My opinion is for just political posturing, and then kick the can, right? Because we're not going to default on our own government. So again, you could argue all day long whether we should or shouldn't, but we need to pay our bills and we move on. Or we'll argue about it again, when it comes due next time. But that's obviously the big news out there from the U.S. The big news around the world, though, is the Chinese situation. You have Biden and Xi agreeing to meet. I can't remember the exact date, but they're going to have a U.S.-China summit, which can only help relationships. And secondly, in China, the Evergrande situation where we're worried about this huge company defaulting, it's not nearly as bad. It came out in the Chinese press. It's not nearly as bad as everybody thinks. Now, can you trust information from China? I say yes. I've been made fun of for that, but I mean, a grain of salt, a little bit. I guess they could be completely making this up, but I'm not that much of a conspiracy theorist, right? So I kind of take it at face value that things are not as bad as they were initially portrayed to be. And every China stock out there is up 5% plus this morning. So all of my favorite names, Alibaba, Didi, Neo, KWeb, JD, Pinduoduo, you name it, it's up today. So that looks like the best of the long options once we get to the market open. All right, with that, let's go ahead. And if you're catching us on replay, make sure you subscribe, hit the notifications bell. If you want to hop on the room, it's $25 a month. With that, let's go ahead and get started. All right, welcome back. Here's our lineup card for today, Thursday, October 7th. Standard disclaimer applies. This is a financial education presentation. You have to do your own due diligence for acting upon anything you hear this morning. Full disclaimer information is available at OTOTnow.com. All right, standard mission objectives apply. We're going to grow our money, protect our money, and live off our money. Again, looking for the hottest themes that are out there. And payment processors have always made money. I think we continue to spend a lot as consumers in the U.S. We even have excuses to spend sometimes. Kind of like, coming out of a pandemic, let's help everybody out and spend a bunch of money. I like that. Largely investing is taking advantage of the U.S. economy. So that is all very helpful to you and I that own individual stocks or, index funds or whatever, exposure to U.S. equities, I should say. But yeah, that's why we're taking a look at AFRM today. AFRM will recover, like I said, in the open. We'll talk to the RMD rules. Our flow, long, short, open, short, long. We're going to talk long-term stuff. We'll go around the world on CNBC. We'll take a look at the futures. We'll get into the short-term stuff as the market opens and then come back to the long-term stuff and close with our topic of the day. As far as where we are as the market, this is TD Ameritrade Think Pipes. Again, a little bit of congestion here at this, 425 to 435 range. If today continues up, we could break higher and kind of back into the channel. So even though we've had this sell-off in here, which is at 5 to 7% for the most part, we've kind of bottomed here, right? Do I think we're out of the woods? No. Well, what will I say tonight? Is I will say expect a sideways fourth quarter. I think there's going to be lots of volatility. Volatility brings opportunity too, so it's not all bad. But this is not the sit back, do nothing, get rich phase that we've been kind of used to for a long time, right? All right. Zooming in here to the 5-day, you can see there's how strong the futures are, kind of a straight line from yesterday morning all the way up to this morning, selling off a little bit, but I think we continue higher today. And that's how we're set up for the day trading mode. We have Rocket Lab, RKLB, LOOP, which is low volume, as you can tell by the chart. And then Neo is the one we're going to take a look at as far as the Chinese tech names this morning. All right, let's go over to CNBC.com, look at everything real quick. Refresh here for the future, so you can see not quite as up over a percent like we were earlier, but still up pretty good on the day. And again, that's largely because we've avoided its relief rally, that we've avoided the government default. All right, Europe up 1% across the board. Asia in the green, you got Hong Kong up 3%. Maybe that's probably because all the financials, not all, but a large portion of the financials are in Hong Kong, and they're worried about the Evergrande thing. Bonds, again, this 10-year continues to rise, 1.55. Oil, 77. Gold and silver selling off a little bit. And then crypto has kind of been on fire, selling off a little bit this morning. All right, as far as the major headlines out there, and again, it's avoiding the government default. GOP leader McConnell, short-term debt ceiling extension, so we can do all this again later on, but at least for now, it's in the rearview mirror. All right. And then a bunch of upgrades across the board of names you love. Facebook bounced a little bit based off of the sell-off it had off of the negative news. All right, that's it for the headlines. Here's your Affirm Holdings. So this is a big bathtub, right? And it's really come up strong. Here's your 20% move higher. So, if you look down here, you're not going to like anything you see, right? Yeah, terrible ratios, not profitable, but it is a long-term theme that has always been profitable. So again, these companies can stay unprofitable for a long time, but is now a good time to hop in? I would say wait, let it sell off a little bit before you hop in. All right, let's go over to TD Ameritrade and set up for the open. Good morning, everyone. Welcome to the On Time on Target play of the day. We have 5 seconds to the market open here on Thursday, October 7th. Here's the market open. All right, the futures are up almost just shy of 1%. They were up over 1% earlier. We've got 4 charts in front of you, so we're only taking longs today is the point, is why I bring that up. So we'll zoom in, kind of look at the market action here. Here's Rocket Lab. I like this story. Didn't write it down, so I have to think for a second what the story is in Rocket Lab. They have a space sale contract with NASA that looks pretty juicy. That I don't know for sure what that is, what a space sale is, but anyhow, looks like a juicy contract. We have Loop, which is low volume, which got a major upgrade there. So you kind of have to wait for the volume there. It's only 12,000 shares in the first minute already. And then you've got NEO as part of the Chinese names. Really, I kind of like this NEO. I'm not sure we can cover all the way down to 35.10, but we'll probably cover below this 35.20. We'll see what happens with this morning. But again, looking for a 35-cent stop. If it sold off down here a little bit further, that would be nice, actually. So again, looking at NEO long, 35.25, it's going to be 30. I was going to say 35.60 is our entry, but it went right through it. A lot of volatility in this name. I may decide to switch over here to the Rocket Labs. That's going to be an easier entry. Yesterday's trade worked, by the way. I published it on it was about mid-afternoon by the time it finally hit. All right, we'll go 15.15. So our entry point is, we'll go cover below the low of the day, 15.10 now. We'll do a 20-cent stop. So 15.05, 15.25 is your entry long. 15.25 is the entry long. And again, with a 20-cent stop is what we're looking at. That's if 15.05 holds. Again, this is Rocket Lab on the space sale announcement that they got a major contract with NASA is why we're taking this long. That and then the market's on. You go over in that left pane. There's our 15.25. So let's take it here. You're in the name long. You're covering down at 15.05, which means we expect it to hold above the low of the day. So here's our arrow to remind you which way we're going. And then we'll do our math for our 3R. So again, 20 cents is the risk unit. So 15.45 is your first R point. So you can zoom out here and get into the other, get those drawn at least. So you have 15.45, 15.65. 15.65 is the second R point, and then our exit point for today is 15.85. which is, it was there this morning, right? So expecting it to, again, as the storyline gets discovered, as people are waking up and figuring out what's Rocket Lab doing, why is it up 9%? Do I want in on it? Basically, it'd have to go up to about 13% on the day for us to get paid on our trade here. So we'll let that cook for a while. We're basically right at the entry point. You could still take it. I think it's a safe trade. I like how it's acting, but we shall see. All right, Loop, you just don't have enough volume to hop in. If you go in and buy 10,000 shares of it, you're moving the market. NEO's been flopping all over the place, so we're going to look at some other China names. We'll look at Baba, which again is my favorite out of all of them, gapping up and acting nicely, if you will. And then let's see. We have KWeb probably isn't up quite as much, should be in the fours. It's usually a little bit lower than the rest of the pack because it's a diversified index fund. And then TME is 10 Cent Music, up 4%. PDD is Pin Duo, not up quite as much. And then we don't really look at Luckin Coffee that much anymore, but let's take a look. Luckin Coffee, we left at the mid 15s, right? 15.25, 15.50. It's down here at 13.65. I think there's going to be a better entry point in the coffee. All right, let's look at our trade. It just busted out. So we get the red X of shame. We haven't had to do that in a while, but there it is, red X of shame. I would not hop back in and take this name. I do like, I liked our entry, but once the entry fails, you don't know why it failed. So you have to accept the loss and move on. So we're down 1R, but we're up 3R yesterday, so no big deal. All right, as far as the overall market, up 1%. So that's nice. Let's zoom out a little bit and get back to the long-term focus and see what's up. Apple calls are up. That means Apple's up. Trying to find it in our list here. I don't see it yet. We'll probably see it somewhere, but probably up around 1% or so. You have Alibaba, 5%, KWeb, almost 5%. There's NEO, C Limited's a tech firm, Trade Desk. So this is kind of a tech, looking on another screen and refreshing to see how much the NASDAQ's up. 1.2 for the NASDAQ, very nice. So some of the tech names that have sold off hard are bouncing. You got Costco, Upload, Esports. There's MasterCard as your payment processor. Let's check real quick on Affirm, AFRM. Well, it's holding in the green today after that huge move yesterday. So that's pretty impressive, showing some staying power. There's Visa right there with it, up 1.7% today. So some of the payment processors kind of catching up. All right, let's look what's down. Only a handful of names. Clickstream winners, those are both specs. CRPTs, your crypto ETF, down a little bit, along with MSTR, and then FXD, FMB. Those are both the major bond funds out there. When the market's up, they sell off a little bit. When the market's down, they go up a little bit. So not too much out there. And same with gold and silver. They're selling off because the market's up. All right. That is it for the long-term investing stuff. Let's come over and talk RMDs real quick. Then I'll let you go for the day. All right, required minimum distributions. These are for traditional IRAs as well as inherited IRAs. So it stands for required minimum distribution, as you can see. The money that must be withdrawn, and if you mess it up, it's a 50% penalty. Now, I will say, if you're using an advisor, the advisor can generally write a letter taking I haven't had to do this, but I've been told that from the custodians that if the advisor says, yes, the client didn't do this, but I'm here to correct it, and you correct it in a timely manner, which is between you and the IRS, that the IRS will actually waive the 50% fee. It's such a huge penalty, right? So it's kind of ridiculous that the penalty is that high, but it is. So you have to follow the law. But if you mess it up and you're with an advisor, your advisor may have an out for you. But it applies to your retirement plans. So again, your 401ks, traditional IRAs, SEP IRAs, simple IRAs. For the most part, the CARES Act has taken the RMD age. If you weren't already taking required minimum distributions at 70 and a half, now the new age is 72. Right. So if you're already taking them, you continue to take them. But if you did not trip the RMD schedule, then you can wait till you're 72. There is legislation out there right now called the Secure 2.0 Act, which will likely, and I think it will get passed, this, at least a specific portion of it will get passed, to where the required minimum distribution age is 75. So why is it moving up? Well, again, it's more beneficial to really everybody involved if you kick out the required minimum distribution. So why would it be a benefit to the individuals? Well, if you have sizable retirement accounts, that means you probably have led a good life of strong financial decisions, and you have a sizable account, and you probably have other income streams out there, and you may not actually want to take this money out, right? Because you don't need it. And if you don't need it, why would you take it out? Well, the only reason you're taking it out because it's required by your government to take it out. So that's how you win as the individual. Why does the government win? Well, the government plays the ultimate long game. So the government gives you a tax break up front when you're in your peak earning years. They let you grow this thing for 3-4 decades or so. And then the longer they wait for you to take it out, since markets go up over time, the more money that's going to be taxed out of it. Right. So the government wins by letting you grow a ton of money, the 2, 3, 4, 5x, whatever you put in initially. And again, the benefit they gave you, not only did you say, if you put 100,000 in total in your lifetime, the benefit that you saved in taxes is probably $20,000 or $30,000. But if they let you grow that to $1 million account and then tax that later, pretty good deal for the government. People tend to think in retirement their tax rate will go down, and that's good in theory. But if you have residual income, i.e., you're a lifelong investor, then you're going to have income you're paying taxes on, or capital gains, or other things that's going to drive up your tax rate. Social Security is taxable. A lot of your retirements out there are taxable. So these things add up, is what I'm saying. And taxes tend to, we'll see if taxes go up over time. I personally think they will. That's why it's good for the government as well. All right, you can always take more than the RMD. These are your retirement accounts. So again, it's just a minimum. A lot of folks will calculate the RMD, and if it's like $1,400 and 1432, they'll just take 1,500. I encourage that behavior, right? So just instead of cutting it to the actual penny, why not just take a little bit more, and it's fine. The calculations, the stretch IRAs are now dead off of the Secure Act. So that means if you inherit an IRA after the magic date, and I think it was somewhere in 2020. If you inherit one now, you have 10 years. Before that, you had over your life expectancy. So you're on a different schedule. Now, all of this stuff is calculated by your custodian. If it's not calculated by them, your advisor will do it. And if you don't have an advisor, then you got to do it on your own, which would be a little bit painful. But you can educate yourself on how to do it and make sure that you do it every year. It's based on the December 31st of the previous year. So wherever the account closes, that determines the account value, and then you apply it to whatever schedule that you are on, which if it's just you, that's your birth date. If it's an inherited IRA, it's a combination of their death date and your birth date sets a schedule for you that is, again, unique to you at that point. And again, it basically drives the account to zero, but eventually it's past your life expectancy. So they don't make you take it all while you're alive, but they will you have to take most of it. And if you live, I think, to 120, it'll actually go to zero. Not that anybody's living to 120 yet, but they may, right? Here's the calculation for you. You can look through that on your own. Inherited IRAs, if you have one of these, again, the new rules make it a little bit easier because you have 10 years to basically consume it. These also applies to Roth IRAs. You have to withdraw it, even though there's no tax consequences, but you do have to get out of Roth IRA mode. You have 10 years to do that. So, all right, that's enough on required minimum distributions. That's all I've got for you today. Again, markets up around that 1% level, and hopefully continue higher on the good news. With that, we'll talk to you back tomorrow, Friday morning. Bye.